In less than 3 minutes, let's talk about the differences between earned income and passive income. Earned income is when you trade your time for money. So if you work for a company that requires you to go in from Monday through Friday at 9 a.m. to 5 p.m., you're trading in 8 hours a day, 5 days a week to get your earned income from your employer. Let me give you the IRS definition. Earned income is money you make from employment, including wages, salaries, bonuses, commissions, and tips. Another example of earned income is self-employment. If you're working 40 hours a week for your own company, it is still considered earned income because you put your time in it to get paid. For the year 2022, your earned income is taxable by the federal government at 7 separate brackets ranging from 10% to 37%. Make sure you fill out your W-4 correctly so your employer doesn't withhold too much or too little for your federal or state income taxes. Passive income is also known as unearned income from investments and other sources of income not related to your employment. Examples of passive income are the interest you earn from savings accounts, child support and alimony, dividends from stocks, and capital gains from your assets. Keep in mind that these unearned income streams can be taxed differently, so let me give you some examples. If you sell your house this year for $300,000 and you had a mortgage balance of $200,000, then your unearned income from capital gains is $100,000. If you have a savings account that pays you 0.5% in APY and you have $10,000 saved, then the bank will pay you roughly $50 in interest every year. If you own a stock, ETF, or mutual fund that pays you dividends every quarter, this is considered your unearned income. Personally, I think this is the easiest way to create your passive income stream. If you own $10,000 in a dividend stock that pays you 4% in annual dividend yield, you could earn up to $400 a year. Real estate is another great way to earn passive income. However, and this is just my personal opinion, I wouldn't consider it passive initially because of all the work I would have to do up front. Once all the work is done, then I would consider it passive income. You can do either long-term or short-term rental for your property. Let me know what your thoughts are on the real estate. The common misconception about passive income is that you don't have to put any work to it and you just get rich right away. Creating a passive income stream will still require you to put work up front so you can passively earn it. You will still need some sort of earned income to build your stock market portfolio, real estate portfolio, writing a book, or making YouTube videos like I am right now. There are so many passive income ideas, so I will make a fire video about it in the near future. Thanks for watching. Don't forget to check out these 2 3-minute videos as well as the new fire video coming out tomorrow Sunday at 9 a.m. Have a good one.
Thanks for watching. Don't forget to hit the like button and subscribe for more fire videos.